Let's go over a portfolio update. It's been a couple weeks since my last one. Today's Friday, November 14th, 2025. And last time, I sold off a little bit of a lot of different stocks that were up. I'm glad I did, because I went ahead and took some profit from those stocks, because earlier this week, the stock market dipped a little bit. So I'm glad I went ahead and took that profit while I could. So I'll go over the portfolio as a whole, and I'll talk a little bit about my profit and loss on some stocks recently, profit and loss on some options. I've been busy with options lately, and I'll explain that account deficit has to relate to those options. So portfolio as a whole, we're at almost 29,000, pretty flat today, down 1.8% past week. You can see that dip, down 3.2% the past month, although we're up a little bit past 3 months. And for 2025, we are up 5.6%, so not too bad. So let's look at stocks and ETFs, realized profit and loss. So past week or so, I've been experimenting with a new method where I would buy one stock at a limit price below its VWAP line, and then I would turn around and put another order, a limit order for 2% above what I bought it for. So in theory, I would make 2% on each deal. And I thought, oh, that's not too big a percentage. 1% is just way too small a margin of error. And 2% is enough. We can still make something, but it's not as quick as I thought it would be. This turnaround back and forth, I thought it'd be like, oh, it's kind of like day trading, but not really. More like a couple days in between trading, weekly trading. They're not as turning around as quick as I thought. So you can see here the stocks that I was into and out to. You can see the SOX S and the SOX L were the losers of this past week. I lost percentages on this, but these other ones, those positive, those green 2%, I did make 2% on each of those deals. So the SLV, I made 89 cents on it, or 2%. Google, I made $5.66 on it, or 2%. And that's for the past week. So those leverage products, the SOX L and the SOX S, brought me down. I just went ahead and get out of it. But the past month, including all those little deals where I shaved off some profit, those were successful. And that brought me up. You can just scroll down lots, I'm a little crazy with it. But past month, I'm up $404 of profit from selling off some of those stocks. So that was nice. Let's look at some options. So I got to go back and scroll up. Okay, so in terms of options, you'd say I have some pending orders here. I have some stocks that I own, for example, YMAG, and I sold some calls on it, or at least I'm attempting to in this pending orders list. And then I have some iron condors out there, which I put in a low limit saying I want to close these. So I open them, and then I turn around and I put in a real low limit saying I want to close it real cheap. Just so that once these iron condors approach expiration and they are less valuable, it'll automatically buy it and close it. Although, a 5 cent limit, not sure if I'd hit that. I'd probably want to close these earlier before they hit them, but I put them in there just as a safety measure for me, because I do want to try to close these before they actually expire on the expiration date. And we'll talk about what happens on the expiration date with a real example in a second. And then these are positions held for my options. I got some triple Qs going on, selling some calls, selling some puts for the stocks I want to get into. Yeah, so let's look up history because I closed several things here. For example, on the SPY, I closed a couple of these because they were 50% or more in profit. So I'm like, yeah, I'll go ahead and take the profit now, close these SPYs, pay to close them. But overall, I did make a profit on them. For example, this one down here, this SPY Iron Condor. Let's view the order. Let's see. So yeah, realized profit, $12. How about this other one? Realized profit, $14. So take the profit while you can with these Iron Condors, because they can get a little scary on expiration date. Let's see. Yeah, so Invesco, QQQ, Robinhood went ahead and closed that for me because, let's see here. What's today? 14th. Yes, okay. So on the 13th, early morning, Thursday morning, like 1 a.m., I open up a triple Q short Iron Condor, and that's when the market started to tank in between 1 a.m. and market open on Thursday. So at 8:30, they open up my Iron Condor on the QQQ. I got $30 for it. But the market kept going down, and it shot below my lowest wing of my Iron Condor. So now all of my contracts are not in a good position because there's 4 of them that make up that bird. And so I'm like, okay, let me turn around and try to close it at a higher price. But that was not filled. So Robinhood went ahead and did this for me automatically, saw that, okay, managing risk here, we're just going to go ahead and close this Iron Condor no matter what. So they went ahead and canceled my order and filled it. You can see right here, you've canceled your order to close 1 QQ short Iron Condor. So yeah, as part of our option sell-up process, we place an order to close 1 QQQ put credit spread. The order's been filled at average price of $98 per contract. So instead of me being put 2 contracts of this bird to buy tens of thousands of dollars worth of stock, and on the other half receive tens of thousands of dollars, and it would be where I would still lose a little bit of money on this overall, they just went ahead and bought this back just to close it out, just to release me from my collateral, release me from my obligation to buy anything on this. So that's just automatic risk management that Robinhood will do for you, just in case things go not your way on expiration date. So things can get real crazy on expiration date. It's probably always a good idea to close these things before expiration date, and just like options in general. Generally, you probably want to get out of it and take your profit early while you can, especially with Iron Condors. So you can look at that order to close that. Everything was filled. So everything is good. They got me out of that deal, and that's fine. But that put me in an account deficit, which you can see there. You can click on that. So, oh, the number changed on me. That's weird. So now I'm an account deficit of $10.78. I think it said 30 something dollars earlier. So I'm getting closer to zero. So I am negative almost $11 in my account. But with these options things, they usually settle later that night, and by the next market open, which will be Monday, today's Friday, by Monday, the options board will relay data to Robinhood and your brokerage, and everything will be figured out. And it might still be an account deficit on Monday. If it still is, I could deposit funds or whatever. But I know that a couple dividends are coming to the rescue to bail me out. I can see them coming. So if you look at dividend payments, let's just focus on individual account dividends. You see some pending dividends, the couple of pennies here and there. But the O dividend and the Ulti dividend, those are going to be $27 and the other one $44 into my account. That'll easily cover my negative $11, and then I'll be in the positive. So those dividends will be paid out soon. They'll come to my rescue, and by Monday morning, I will be out of my account deficit and everything's hunky-dory, and we can go back to our options plays. If you like this kind of content, please give it a like and subscribe, and I will see you next time.